Hello everyone, this is Jay, and in today's video I'm gonna be doing my weekly video of my weekly buys and my weekly update on my $8,000 market value dividend portfolio. Before we start, please don't forget to hit that like button. I really appreciate everyone's support. I am over 100 subscribers, which is awesome. All right, so let's go right into the portfolio. So my portfolio, this is the sector allocation for each one. So most of my money is in ETFs, 31%, real estate is 20%, consumer staples 12%, financials 18%, consumer discretionary 2%, information technology 3%, and healthcare 11%. Real estate has been growing and growing, and it's mainly because of realty income. It's definitely on sale right now, in my opinion. Of course, don't take this as financial advice, guys. Always do your research. But realty income is definitely on sale. And I have been buying Vici, which is another one of my favorites. So I am recording this on Sunday morning. It's like 6 o'clock in the morning here in the East Coast of the United States. And I'm having my cup of coffee right next to me. So yes, all right. So let's go right into my updates tab. And this is everything I bought this week. In column A is all the companies that I invested in. Column B has my purchase for the week. All the purchases that I made this week was on October 13, which it was on Friday. And this was the share price at the moment when I bought it. As you guys know, I'm a DCA investor. I dollar cost average into the companies that I like. So the very first purchase that I made was, of course, SCHD, and I made my $25 purchase. And the share price was at $70.37. Then my second position was VYM. I did a little bit more. I usually do $15 for all you guys that don't know. I do at least $25 on SCHD every Friday and $15 on VYM. I did put $20, especially right now it's at a better price. It's under my cost, so I want to really build this position next to SCHD. So I put $20. I put an extra $5, and I'm gonna see if I can do that moving forward, so I can grow in and match it up very closely to SCHD. So the price that it was at, it was $102.46. Then, of course, I put $15 in Coca-Cola. It is on a dip right now. And the share price was $52.98. Then I bought, of course, more realty income, which I'm going to continue to buy on the dip right now. Another $15 in it. And the share price was $50.69. That definitely is helping me bringing my cost down. So it's definitely one that I'm going to continue adding. Then I put more money into my S&P 500 in Fidelity Index Fund, FXAIX, another $10. I've been doing $10 every week, and the share price was at $150.28. Then I started investing in two other ones that I want to build those positions. The very first one is Vici. $10 I put on Vici, and the share price was at $28.96 at the moment. I wish I could have put more. I'm gonna definitely make a video probably this week as to why I want to continue building Vici. This position I think is gonna be one that is gonna be great in the future. That is gonna do very, very good in the future, in my opinion, especially with some of the news that I see out there. My next one was another $10 on J&J. J&J is one of my favorite ones, and it's under my cost right now. The share price I bought it at was at $156.91. So I feel like I definitely bought it at a good price and a good valuation. All right, and then these other five, I put $5 into each one. So the very first one was Stag. Share price was at $34.43. Pfizer, PFE. Share price was at $32.21. Kenvue, KVUE. Share price was at $19.40. Main Street Capital, Maine, which I received the second dividend already. It hasn't cleared out yet. Because I have the drip on. So for some reason, it always takes a couple of days or even a week to reinvest back into Maine. Do you guys have the same issue with in your portfolio or in your brokerage? Because it always takes like about a week to reinvest back. So definitely a position I want to continue growing. And the share price was at $39.85. And then of course Starbucks, which I want to continue growing on this dip. Now this is the only one that it was positive in my portfolio. I'm going to show you in a second. So ticker symbol is SBUX, and the share price was $91.68. So before we go into my portfolio to show you my Starbucks position there, this was the total in purchases this week, which it was $129.68. So I definitely was able to put an extra $30 this week. So but that's pretty much it. I cannot put anything more this week because then I'll go over my budget. So, all right, let's go into my dividend portfolio. And this is it. This is my dividend portfolio. And let's go right into my Starbucks position right here, which is SBUX. I have 2.5 shares. And my cost per share is $88.47. I am in the positive right now. I added what I just bought. So my cost per share is going up because I've been buying in the 90s, $5 here, $5 there. You know, I'm not putting more than that because I really don't want to bring up my costs that much. But even though I do believe in the company for the future, so this is definitely a company. I just see everyone buying Starbucks, no matter what. When I go to Target, you know, with my family. Of course, trying to make it a quick trip too, because they take forever in there. I don't know why, but everybody loves Target so much. But in this one, I always see a line everywhere. Remember when I went to Disney last year, a long line, you know, and everywhere I go to. So this is definitely a company that I'm planning on holding long term. So I'm trying to build that position. So let's go back to the top. SCHD, I'm finally at 27 shares. My next goal is 50 shares. So I'm going to try to see if next week, since I put some extra hours on my second job and I get paid bi-weekly, so I get paid next week. And I'm going to see if I could put like some extra money in there. And maybe I could try purchasing a whole share like I did a week ago. But definitely it was at a great price of $68. I think it was that I bought that whole share. So hopefully I can do that. Right now my cost per share is $72.84. I am in the negative right now, but I don't mind. As I've explained in the past, I don't panic. I feel like the companies that I've chose and the ETFs are great, and I just want to continue to dollar cost average. Realty income, I'm at 21 shares. Cost per share $59.05. Hopefully by next week I'll go on that $58 cost per share. You know, I've been DCAing into this company in the lower 50s. I'm trying to go as heavy as I can, but there's just so many companies that I want to invest in and that I'm trying to put my money. If there wasn't that much opportunity, then I would put even more money into realty income, even though it's taking a big chunk of my portfolio. And I really don't want to do that, but I cannot let this opportunity pass. Procter & Gamble, I haven't added any because it's still a little bit over my costs. My cost per share is 136. It is right now at 144. I definitely want to continue building this position. I love their products. I got most of the products at home are from Procter & Gamble, from Tide to Downy to Crest toothpaste. So many things that we buy at home from their brand. So I think I'm gonna see if I can start putting at least $5 here and there next week. Coca-Cola, I'm at 6 shares right now. My cost per share is $57.66. So I definitely like that cost per share. I am down right now 9%. But I don't mind. Main Street Capital, 15 shares. I want to bring it up to like 20 something shares with realty income. So I'm gonna try to continue building that position too. Medical Properties Trust, I have 55 shares. My cost is at $9.98. It finally went down under $10. I had it at $10, my cost per share. But I am in the negative by a lot, by pretty much half my money. Um, but I am gonna continue buying a share here, a share there, especially right now around the $5. I do believe in the company long term. I think they will rebound, um, especially with what they own. Sachem Capital Corp. I didn't add anything into there. I still have my 43 shares. Starbucks. I already reviewed it. Apple. I did not buy anything. It is at 178 in price. I think I want to start also adding like $5 here and there into Apple so I can continue growing it. I feel like I have too small of a position, especially as I got to remind it again. Of course, I repeat it every time. I did not take advantage of when it was at 120 and $130. I only bought a little bit, so which I should have bought a whole lot more. So my S&P 500 index fund, I have almost 2 shares. Share price is $147 right now, my cost, and the price is at 150, so I'm in the positive in that one. Stag, I have 4 shares, and my price, it is, my cost per share is $34.91, and it closed at $34.39. Vici is definitely one that I am gonna continue building. Maybe I'll share my opinion in another video as to why I want to build it. But I have 6 shares, and it's definitely under my cost. Right now, it closed on Friday at $28.94. Johnson & Johnson, 4 shares, and right now it's under my cost at $156.85. Pfizer, I'm almost at the 10 shares, so that's my goal right now. Trying to get to 10 shares. And it's definitely at $32.11 it closed. VYM, almost 3.5 shares, and it's under my cost. This is definitely one I have $361 invested in this company, in this ETF, and I am right now in the negative by only 2%. But I definitely want to bring it to pair with SCHD. I just want it to be the two nice siblings, very huge in my portfolio, and that will take like around, I want them both to take like about 60% of my portfolio pretty much, because I want those two to bring me the most income. Kenvue, KVUE, this is the spinoff from J&J. I have 8 shares, and I want to continue building it right now, especially at this $19.37 price. And then Bank of America, which was one that I put a lump sum in here. And it is right now, I am down. I am in the negative for by 6%. It is right now at $26.76 if you guys want to take a look. And I think the earnings are this week. So, all right, let's go to the right. And right here, this is my estimated yield on cost on all the companies that I have, which is 4.27%. And this is thanks to mainly Sachem Capital Corp, which is 12% yield on cost. And Main Street Capital is at 7% right now, yield on cost and my price. MPW is at 6% yield on cost according to the price that I have. So I definitely have some high yielders, but my goals are definitely trying to have some extra time with the family. So I have multiple goals. I could not add the column this week, but I'm hoping I'll be able to add it next weekend. I'm going to try to add a column that has my goals and as to why I am investing in these companies and the higher yielders right now. So, and then my estimated yearly dividend, it is around $368 a year. So that's definitely growing. I remember when it was at the couple of dollars, $10, $5, like around that price. It's definitely been working for me. I love DCA. At first, I was very skeptical and I was nervous, but I'm like, oh my gosh, this is not growing fast enough. I want to be a millionaire, by tomorrow. But it doesn't work that way. Just have patience, DCA works with patience. Just be very patient. Do your research, of course. This is not financial advice, guys. I'm not a financial advisor, but always do your research before you invest into anything in the stock market. Okay, and then this is the reason why I continue investing into these companies. It is because I do see that growth in dividends. So this is my yearly income comparison. In blue is the 2022 when I was not when I got discouraged, but then in October, September, October, I started taking it serious and then investing in SCHD and some of these other companies, and I definitely started seeing some growth. And then now this year in 2023, I definitely took it very, very serious, and as you guys can see, every month it just continues to grow compared to the last month. So that's definitely something that I like. For example, in January, $27.66, which is the first month of the first quarter. Then the first month of the second quarter, which is April, $30.64. Then in July, it is the third month of the first month of the third quarter, which it went down, but it was because I made some changes. I got rid of agency and some things, or right before that, I think it was. So I made some changes into my portfolio, but I think it's going to be like this going forward. So my September was my biggest dividend month, which it was $41.22. Definitely. And one of the things, this is my position size in my dividend portfolio. And I didn't want to make this one very long, but I think I do want to review something. It was a comment that I received in the videos that I remember just now, and I'm like, you know what? Let me just do a quick review. So Randy, he's one of my subscribers that he has been supporting a whole lot, and I really appreciate, Randy, all your support and all the comments. And he had a question because Pfizer, ticker symbol PFE, they just cut their 2023 EPS from $3.30 to $1.45, $1.65. They also cut their revenue guidance by about $8 billion. So he asked me the question after he said that, how do you feel about them going forward? So I explained to him a few things. That's definitely a bummer that they cut it. But I feel, right, if we go right into Seeking Alpha, which I'm not affiliated with, I just use it to research my stocks. I use this in stock analysis and other websites. So right now, year to date, they're down. Ticker symbol PFE. They're down 37%. So the EPS right now in Seeking Alpha is at 330. They have not brought it down yet. The PE is at 9.73. The 52-week range is closer, very, very close to the 52-week low. But that dividend yield, you can definitely pick it up right now at a dividend yield of 5.11%. Now, I'm not sure with that cut if they are going to cut the dividend or not. But let's continue to take a look at their metrics. So that dividend rate is $1.64 a year per share, and the market cap is $181 billion company. So this is definitely a company that I see a lot, and I do believe in it long term. And I started a position right when it was right here, like in the $36, $37. I saw an opportunity, and here's the reason why, right? When you expand it right now, you look at it, right? And then you look at the 1 year and you're like, oh man, they're down by a lot too. And this is pretty much the peak right here when it was at around the $51, 40 something dollars, which it was not attractive to me. But if you expand it into the 10 year, right? This is all right here. This peak right here. This was COVID vaccine related, in my opinion, right? They did made a lot of money with the COVID vaccine. So I feel like right now where I picked it up at is the price that is always at, right? It is around always $30, 32, 34, 35. If you guys seen 2017, 2018, it is around that price, $40. And then it goes back down in 2019 to the 34, 36, 30. So it's always, I've always seen it into the very high 20s or low 30s. So that's where I feel it's the price is always at. So that's why now I'm taking advantage of it. This spike right here, this was all COVID related. With the COVID vaccine, they definitely made a whole lot of money. And right now, not many people are taking the vaccine anymore. So right now, this is something else as to why. Let's go to the company profile. Pfizer Inc. discovers, develops, manufactures, markets, distributes, and sells biopharmaceutical products worldwide. It offers medicines and vaccines in various therapeutic areas, including cardiovascular, metabolic, migraine, and women's health under the Eliquis, Nortec, ODT, Vidura, and the Primarium family brands. So they definitely have a lot of other brands. The company also provides medicines and vaccines in various therapeutic areas. And then they, such as biosimilars for chronic immune and inflammatory diseases. So as you guys can see here, this is a whole lot of brands right here. Some of the brands that they have right here highlighted in blue. They're very difficult names for me to say, but they definitely, if you look at the company profile, you can definitely see. And then this company serves wholesalers, retailers, hospitals, clinics, government agencies, pharmacies, everyone pretty much. And they also have collaboration agreements with Bristol Myers Squibb, which I'm sure some of you guys hold that stock also, and other companies. This company has been it was founded in 1849, in the year 1849. So they definitely have over 100 years, over 150 years, or almost 200 years out there. So definitely a big company, and that's up to me. This is the revenue, and of course I think this is COVID related. So right now it's gonna go back down into where it should be. Because now they don't have that COVID boost. But I think it is at a good valuation right now, and I'm glad I picked it up at that time. I did pick it up with a long-term horizon in mind. I did not pick it up as a short-term option, so I'm gonna continue to hold. That dividend yield is a 5.11%, which is pretty high. Based on the company, but the payout ratio is still at 33.61%. So that's definitely a very, very good payout ratio. And the 5-year CAGR is 5%. Years of growth, 12 years. So right now, the next the dividend that was last announced, was 41 cents per share for the next quarter, and the ex-dividend day is November 9th. So you need to own, if you want to get that, collect that dividend, you need to own it before 11/9, so the day before pretty much, so 11/8 and sooner, and then you'll get a nice dividend on December 4th. All right, I'm not pumping this stock, okay? I'm not a financial advisor, guys. Always do your research. That's why I only go into the first page, so then you guys can do your research, and then you can make a decision on it. They have a lot of debt at $65 billion, but they also have a lot of cash in $45 billion. So, and as you guys can see here, this is the nice chart that I definitely like seeing. It is that dividend growth. So as you guys can see, it just continues to go up. 2019, $1.36 per share a year. In 2020, $1.44, 2021, $1.56, 2022, $1.60. So And right now the forward payout for this year probably like around $1.64. So definitely a very good company in my opinion, and I'm planning on holding long term. But of course, just always do your research. I feel like right now it is at the price where it should be. Could it go lower? Yes, maybe. I'm not a business guy, so I don't know their company in the inside, but I do see a lot of their products in the medical field, and some of the people that I am around at or around with, they tell me that hospitals definitely use their products. All right, everyone. So this is it. Let's go back into my position size. So these are all of my positions and the percent that it takes in my portfolio. So SCHD is 23%, All Realty Income 13%, which is very, very high. Bank of America 9%, PG 5%, almost 6%. KO, Coca-Cola 4%. Is definitely been growing since I've been putting more money into it. Main Street Capital 7%. Want to continue to grow that one. J&J 7%, and then I have all the other ones around 2-3%. VYM is at 4%. I definitely want to grow it huge next to SCHD, so I'm gonna continue building that one. All right, everyone. So please let me know in the comment section, what did you guys buy this week? What are you being bullish on? I definitely would like to know so we can continue building this nice community. I feel like I am building a nice community with you guys, and discussing certain topics. Of course, none of it is financial advice, guys. So don't take it as financial advice. Always do your research, and if you need a financial advisor, you should go ahead and seek one. This is not me telling you that you should go do so, but if you feel like it, you can go ahead. They are out there. But please, always do your research. And everything that I share here is my opinion, is my experience. I'm being very transparent. I am not exaggerating numbers. I'm not putting that I put $3,000 and I bought 50 shares of this one or anything like that, because I don't have the money. I am a DCA investor, and whatever I can put into the stock market I put, and definitely has been a great experience so far. Not everything that I've done is perfect. I have made some mistakes, but I'm trying to learn from them. So don't get discouraged. Just if you see this as an option that you definitely want to continue to go on with growing your money and making your money work, just have patience, okay? And do your research before you invest into anything. Definitely, if I could do it all over, I think my portfolio would look a little bit different, not a whole lot different, because I pretty much like almost all the companies that I have. But I definitely start a lot different though. But yeah, please let me know in the comment section. Please don't forget to hit that like button and subscribe so we can continue growing the community. And I reach out personally in the comment sections. I always answer personally, and I answer with my opinion. You definitely don't take it as an advice, okay? All right, everyone. I hope you enjoy your Sunday and the remaining of the week. And have a good day and a good week. Thank you, everyone. Disclaimer. I am not a financial advisor. This is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.